What's good, everybody? This is how you could have made $481 trading the NASDAQ today. So if we take a look at the hourly chart on the NASDAQ, you can see here, this is how the market looked at the close of the hourly candle at 9 a.m. going into the 10 a.m. hour. You can see that the NASDAQ failed to take out this high as well as this high here, which was from January 6th and January 7th. These two buy-side liquidity levels were not swept on the NASDAQ. However, if we look at the S&P 500, you can see here that this same high from January 6th was swept at that same time this morning at the close of the 9 a.m. hourly candle. So you had essentially an SMT divergence, right? So the NASDAQ failed to take out this high while the S&P 500 did take out this high. So generally, when you have two correlated assets that diverge or failed to do the same thing, that's an indication that price could do something. In this case, because they failed to take out the same high, that's an indication price could definitely go lower. So you can see that here. That's kind of how that looks with this SMT divergence. So that being said, we also had, if we look at our daily chart really quick, a daily fair value gap here on the NASDAQ as well, which the market was trading into going into this 10 a.m. hour. So if we look at the hourly chart, like I said, this is how it kind of looks. We have the SMT as well as the NASDAQ trading into a one-day bearish fair value gap. So that essentially gave me a short bias going into the 10 a.m. hour this morning. So let's go down to the lower time frame and we can kind of see what that looked like. Here's that SMT again on the lower time frame. You can see this high was the high of day for today. And you can see that the market essentially was going higher. When the market opened, we essentially were just trending higher. And then we created a bullish fair value gap here, this small BISI, this small BISI here, which we inverted here at 9:50 a.m. as well as we had a market structure shift here at, let me go ahead and fix this. We had this market structure shift going into 10 a.m. as well. So at 9:56, that market structure shift was essentially confirmed. And we also formed this sell side imbalance, buy side inefficiency fair value gap. So you can see all this essentially was telling me the market is going to go lower, right? When you're seeing a market structure shift, when you see a SMT, when you see bullish fair value gaps being disrespected and bearish fair value gaps being respected, right? That's essentially telling you that price could continue lower. How far can it go? Well, let's see. We have sell side liquidity resting down here. So I think this could be a great trade terminus to potentially target for our exit. So we'll go ahead and mark that out. And then we also had some internal liquidity here as a 1 minute BISI bullish fair value gap. So that's another great trade terminus. So if we take an entry here at the start of this fair value gap with our stop above this fair value gap, you can see there's two fair value gaps here. All right, we have this SIBI here and we have this SIBI here. This one should remain unfilled. This should stay as a breakaway gap. So it'd be safe to put your stop loss right above there, targeting ultimately this liquidity here for about 84 points on the NASDAQ, or you could even target this internal liquidity here for about 48 points on the NASDAQ. Either way, great risk to reward, regardless of which you target. You could take a partial here, take a few of your contracts off here, and then take the remaining off here. So either way, it's a great target. So let's kind of see how this would have played out. So if we take a sell here, 5 micro contracts on the NASDAQ, stop loss, like I said, above this fair value gap, targeting ultimately this sell side liquidity, we would be essentially going for a pretty good risk to reward here. So let's see how this would have played out. We have immediately, we respect this bearish fair value gap, this SIBI institutional order flow entry drill. You can see we barely tap into it. We don't even hit consequent encroachment. So that's a great sign that the market wants to continue lower. we form this order block here, right? Coming off of that. So this order block essentially should be respected to send price lower. And then you can see we come back, we retest the bottom of it, and then we continue to go lower from here. And you can see that order block is respected perfectly, right? We have some liquidity here at this low, but that's really minor liquidity. So there's not really anything to worry about. We come back into this order block, and you can see that we are pretty much respecting the mean threshold of this order block, right? So the middle point of this order block is getting respected here. So if y'all see this line, this middle dotted line here is being respected, right? That's the mean threshold. This is how you should be watching price to ensure that, you know, the change in state of delivery is not necessarily changing from, you know, in this case, bearish to bullish order flow. You want to see the order flow remain to be bearish. So you can see, again, we're respecting the mean threshold of this order block, right? These two up close candles, that midpoint of them, that's the mean threshold. So we're respecting it. We're continuing to go lower. You can see we get some great delivery here. And we form another imbalance here, which now, you know, we can watch to see, is the market going to respect this one? And we also had one up here as well. So we had this imbalance and the one below us. So now we want to see that the market is respecting these and not closing above these fair value gaps. So you can see we trade higher into this one, but we never really trade above it. So there's no really reason to panic here on this trade. At this point, you should move your stop loss down to break even, staying right here, because now we've taken out some liquidity. So you don't want to, you know, give anything back at this point. And then we get some delivery into this internal imbalance. So here you could sell 3 of your contracts just to pay yourself. So if you take 3 off here, we have 2 left. So we're holding runners all the way to the sell side liquidity level. But again, the market could definitely reverse here because we traded into this internal liquidity. So you want to make sure you're taking some off. So from there, we trade into this now fair value gap, which now the market should respect. If we're still in sell side delivery, we should continue to respect these fair value gaps, right? So you can see we don't close above it. And we get great delivery down into the imbalance here. And we continue to trade lower. We form another sell side imbalance here. Buy side inefficiency, a bearish fair value gap, which now we want to see if the market's going to respect. In this point, we trade into this internal liquidity here. So at this point, you know, you'd probably want to move your stop lower on these 2 contracts just to guarantee some profits. And then we continue to trade lower. We kind of fast forward this. You can see we kind of just chop around here a little bit. But what the market is doing at this point is engineering liquidity, right? So these lows and highs are just engineered liquidity to be swept, right? So the market comes and sweeps these lows. And now that we swept these lows, now the market, you know, it wants to go sweep the other lows here. So we have some buy side liquidity here. This is key to watch. We have buy side liquidity resting right below a bearish fair value gap. So to me, there's no reason to panic on this trade, because if the market wants to go lower, it could very well trade into this fair value gap. We would want to see it stay above here, right? So in fact, we don't even want our stop loss to, if the market is truly going to go lower, we should institutional order flow entry drill into this fair value gap, or if anything, maybe hit the consequent encroachment and then trade lower, which is the midpoint. So we're either going to tap into here or we're going to hit the midpoint and trade lower. That tells me if the market is still, you know, very, very heavy or, you know, bearish in this case. So you can see we sweep this high here, and then we do tap into this fair value gap, which should essentially send price lower. And ultimately, it should send us trading right into our target here for our full take profit, securing a profit of about $500 on this trade. So that's, to me, this was a great setup today. A great, you know, there was great delivery all the way through. And you can see the best thing about this trade is if you truly know PD arrays and you know what order flow looks like when it should be bearish and bullish and what we should be respecting and disrespecting, you can continue to hold your trades longer, right? There was at no point in this trade was there ever any reason to panic, right? Because we were respecting all of the premium arrays, right? We respected the fair value gaps, the bearish fair value gaps. We respected the bearish order blocks. We were disrespecting bullish fair value gaps, right? We had this bullish fair value gap here that got blown through. We had this bullish fair value gap here, which we did tap into it, but it rebalanced and then we blew through that one. We had this one that we blew through. So continuing to respect bearish fair value gaps, bearish premium arrays, and disrespecting any discount arrays like bullish fair value gaps. That's key when you're watching price delivery. You want to see that the market is continually respecting what it should respect, right? So that's how you can ultimately hold your trades longer. But you need to know what, the order flow you should be looking for, right? Once we had this market structure shift up here and this change in state of delivery, that's when we were officially now on the sell side of the curve, right? This was the buy side. This was the sell side of the curve. So, but this is ultimately my model, right? I like to see an inversion up here. I like to see a SMT number one. I like to see a fair value gap get disrespected. And then I like to see a market structure shift or a change of state of delivery, right? Which we got all three of those things up here. And then you get your entry and ultimately holding down to your target. So that's all I got for y'all for this one. I'll see y'all in the next one.